price. But let's move on. As a matter of fact, a couple of guidelines were flagged off as far as the RBI policy is concerned. We'll focus on that. But more importantly, why is monetary transmission that difficult? Even the RBI governor acknowledged the same. Bankers have been saying that perhaps this is not the time to pass on benefits. They need liquidity in the system before they can pass on the benefits to consumers. We have Mr. D.K. Joshi, Chief Economist at Crisil, joining us from Mumbai. Sir, great having you with us. Is it a real problem right now? Monetary transmission, the governor saying openly that they can't really force the banks to cut rates. But bankers on their part have been saying that we can't do anything about it. We need liquidity in the system. You give us a CRR cut, maybe we can pass it on in the form of a rate cut. Do you think monetary transmission is a real problem right now?
Well, I think it's one of the problems because I think whatever rate cuts we have seen, which is about 125 basis point, they have not been passed on to the end consumer. I mean, if you look at the lending rates for 10 large banks, I think they have come down by only 20 basis point. So very, very partial and very small amount of rate cut has been passed on to the end consumer. And the reason for that is one, the deposit rates remain high. Unless deposit rates come down, the lending rates cannot reduce. And then of course I think there's also a liquidity issue because liquidity has been in deficit. So yeah, transmission is a problem, but I believe that the transmission will pick up in this year as government starts spending more. I think you'll see some liquidity situation improve in the system, and with the inflation coming down, the banks will not have to necessarily offer very high interest rates to mop up the deposits. So I think deposit rates will also head down, and that will create space for lending rates to come down a little bit more than what they have in the past.
Do you think it's a difficult situation with the RBI saying, as per the policy, that further cuts may be limited? You look at the fine print, they more or less said it that further cuts from here on are going to be a little difficult to come by. In that scenario, the RBI doesn't cut rates further, banks don't cut rates further. So whatever 125 basis point cut that we saw doesn't actually get passed on to anybody whether it's industry or consumer. So that still creates a kind of a anomaly in the system. How do you think the RBI would be able to address that?
Well, I think my sense is that, as I said, that as we go along, I think the liquidity situation will improve somewhat, and you'll also see the past rate cuts being passed on into the system. I think, and since the as long as inflation doesn't come down and stabilize at where RBI believes it should, which is 5%, I don't see any scope for aggressive rate cuts. So I think even today, when the growth is down to 5%, the repo rate is 225 basis point higher than it was during the Lehman crisis period, which is when the global economy had collapsed. So I think interest rates remain high because of the inflation issue, and as long as that is not addressed fully, I think the scope for monetary policy to ease further will remain limited, unless I think, of course, inflation surprises on the downside. I think which is a possibility. The central bank itself has reduced the WPI inflation target to 5% by the year end, and I think there could be further surprise on that front. I think if the global crude and commodity prices are a little bit lower than what they are expected currently, and also because I think what we have seen in 2012-13 is a very significant demand destruction in the system. The private consumption growth, which was holding up at almost 8% per annum, was not dented during the global financial crisis, has actually come crashing down to 4%. So demand slowdown, which means that the pricing power will remain limited. And I think in this scenario, there is possibility of inflation surprising on the downside also. Always there are risks to inflation, but I think if that happens, then we'll see the central bank cut some more rates. But overall, I think I would say that some more transmission, which hasn't happened, is likely to happen in the next 2 to 3 quarters.
Mr. Joshi, would you say that perhaps the jury is out there in terms of whether or not inflation has eased on the back of the RBI's tightening, or because of a fall in commodity prices across markets?
Well, it is both. I think the commodity price, crude price, I think immediately gets reflected in the system. I mean, not in things like diesel, etc., but particularly if you look at petrol prices and the prices of naphtha and fuel oil, etc., I think they have come down quite significantly as the global crude prices stabilized. And commodity prices also have a benign impact. I think part of the reason why core inflation is down to 3.5%, I think is that commodity prices coming down sharply. If you take the commodity price or metal prices, let's say, out of the core inflation, then the decline in core inflation is not that sharp. It is very much there, but it's not as sharp as it appears in the current measure of core inflation. So I think, yeah, there is I think overall inflation dynamics are mixed. I mean, if you look at the diesel prices, they are only rising. If you look at the electricity prices, they are going up, and they are likely to go up going ahead. Food prices remain high, food inflation remains high, but because of commodity and crude prices coming down, and because of the pricing power going down, we've seen inflation come down sharper than what was expected earlier. So I think there are forces on both the sides. I think right now the forces that bring it down dominate.
Okay. Mr. Joshi, I just wanted to draw your attention to what I think is a bit of a disconnect. You've got RBI talking about 5.7% growth, but the government has indicated anywhere around 6.4%. So I think that there's a bit of a disconnect there between the RBI speak and the governor speak.
Well, I think if you look at the last few years, I think the government is always a bit more optimistic, and the central bank is a bit conservative on its growth forecast. And I think we believe that growth will settle somewhere in between. Our forecast is 6%, I think, which lies between 5.7 and 6.4%. So I think a couple of basis points here and there doesn't really matter. I think what is important here is that nobody is talking of a sharp recovery. Whether it is 6% or 5.7 or 6.4%, I think the range is quite narrow. We are not talking of 7.5% growth here. So everybody is, I think, apart from some differences here and there, I think the general tone of recovery is that it's going to be a mild recovery. It's going to be a recovery which is dependent on how the monsoons play out. If agriculture doesn't do well, then the growth again slides down. So I think a very, very fragile recovery is in cards in 2013-14.
Mr. Joshi, just one quick question, sir. On the IIP numbers, we have the March IIP data which comes up on Friday. Core sector growth dropped to 2.9% in March. Is the industrial recovery likely to come anytime soon, or perhaps as the GDP picks up, we might see some pickup in the IIP number? I just want to get your perspective. What do you think on the IIP number this time?
Well, I think this time I don't see a much upturn in IIP. I think if you look at the auto numbers, they're still weak. If you look at the PMI, that is also indicating weakness. But I think as you go along deeper into the year, which is 13-14, I think we'll see industrial production also pick up. Some signals of that are visible from the export side. As the export growth picks up, at least the export-oriented industrial sectors will see some lift. And then I think also because I think we'll see some impact of interest rates on consumption demand, so consumption-oriented sector will also lift. So I believe that industrial growth will pick up, but it will still remain subpar. I mean, we don't expect manufacturing growth to go up beyond 4.5% in 2013-14, which is way below the trend line.
All right, Mr. Joshi, thank you so much, sir, for joining us, giving us your perspective as far as the macro situation, and a quick recap of what the RBI said and did as far as its monetary policy is concerned. That's a wrap from our side on Power Lunch.
But do stay tuned to NDTV Profit. Coming up next is breaking market news.